All right. Hello, everybody. This is Michael DeGioia from the Dash Trader Newsroom. What to expect from 2021. And as always, it's me, Michael DeGioia, educator and institutional sales director here at Dash Trader, joined by my co-host, Jill Malandrino, global markets reporter from Nasdaq. Jill, how you doing? And happy Friday to you.
Yeah, happy Friday. It's been a quite momentous week for us in the markets and just in general.
Yeah, absolutely. And on moving right ahead to our first news item is Joe Biden has been sworn in pretty much without a hitch after a pretty exciting run up to that swearing in. He's been sworn in as the 46th president of the United States of America, and he has been moving very, very quickly to reverse many of Trump's executive orders. And certainly would love to get your thoughts on how the Biden administration, might affect the U.S. stock markets and the world markets. And certainly one thing that was immediately done was that the U.S. Is rejoining the World Health Organization and has re-entered the Paris Environmental Accords. So I'd love to hear your thoughts, Jill, on how the Biden administration and how the change will potentially affect the U.S. financial markets and some individual stocks potentially.
Yeah, it was pretty interesting. It seemed as if the world took a collective sigh of relief on Wednesday to see that there wasn't, anything on the front of insurrections or so forth, and it was a relatively peaceful transfer. I think Biden's doing a fantastic job of delivering a very centrist message. It is comforting to see that there are experts and seasoned public servants coming into positions here that know how to manage a pandemic, that know how to manage diplomatic relations, to understand logistics and so forth. So it seems as if the markets have digested this well. We saw that, it had one of the best inauguration day moves in the market. There's one other president, and it's escaping me right now, I think it was Reagan, who had just a little bit better of a move than what we saw on Wednesday, and it followed through to Thursday. Even listening to Dr. Fauci last night, it was like night and day, being able to let the science speak, as he said, and being willing to, say we don't know how this. It's okay to say I don't know, and we're working on it, rather than saying what somebody wants to hear and ignoring the science. So. It's not a dig. I don't want to turn it into a political conversation, but there is definitely a different vibe with the way the press secretary and the press pool are being managed. They are leveraging Amazon to help with logistics. They are leveraging top talent to get vaccination through the population and to stop the spread of this. And whether you believe in masks or not, whether, whatever side of the spectrum you're on, the fact of the matter is there's a strategy. And we are starting to look to the other side of this. And I think it's great that they're trying to deliver a unifying message and pull everyone together versus us versus them. And that seems to be the feedback that at least I've seen around the world. So that is encouraging. I think, of course, and we've seen this play out, that, EV stocks, anything that's related to the new Green Deal have been doing fabulously well. Whether or not we need to put a break on that, that will remain to be seen. But again, that you're seeing multiple sectors perform. You're seeing participation from small caps. So it's more broad-based than it was through the rally earlier in the year. So time will tell. We will not be straight up every single day. It doesn't work like that. We've seen a little bit of volatility in the marketplace. So, we're 3 days into the administration. I think the policies that are going to be most impactful, the most I've heard about, is raising minimum wage to $15. What that means for small businesses, can they afford to bring staff back on when they're going to have such a significant raise in a fixed cost? On the other hand, you have the human element of it as well, to get people out of poverty. And that $15 will go back into the economy at some point. So I think that's really going to be a big point of contention. But in terms of getting stimulus, in terms of getting a vaccination strategy out there, that seems to be pretty solid. And then, of course, we'll start to look towards what the taxation and healthcare strategies are going to be looked at further down the line. But right now, it appears that the immediate high high priority initiatives are on the table?
Yeah, so my initial responses as a trader is that the news is usually in the price, and the tech companies, the big tech, as well as just technology in general, really surged back really quickly, and that tells me that Wall Street thinks that Biden will be good for technology. That was my response, because technology had not really been participating quite as well in the last couple of weeks, let's say, or at least from the election time. And certainly they had gotten a lot of attention, positive and negative, but probably more to the negative side. But that seems to be that technology, Wall Street thinks that Biden will be good for the market, and specifically big tech. And we're going to look at the charts at the end, because the news is always in the price. It's always in the charts. And it's always in the way that the stocks are reacting. Now, that also could be just because of those extremely powerful Netflix earnings, because usually Netflix is considered the bellwether. It's the first big tech company to announce its earnings, and it had kind of a blowout earnings. And we're going to look at that chart as well. But that also could have been. It may not have been the inauguration. It might just be that Netflix is predicting, or indicating rather than predicting, that technology is going to have a fairly good earnings season. And certainly we have a lot to talk about when it comes to earnings season, because it's 2020 year-end results. So the next thing I'd like to mention is Janet Yellen making a comeback. And it seems like there's a lot of former Obama Biden staffers and Obama Biden players that are reemerging into the Biden administration. It's part two, a continuation. Janet Yellen is becoming the first female Treasury Secretary in U.S. history. What can we expect from her in this role, in your opinion? Is it, to me, I'm very interested to hear this, and I'll give you my thoughts afterwards.
Yeah, it is.
What are your thoughts about Janet?
Yeah, it is interesting. I mean, she's certainly competent. She has the experience. This isn't her first rodeo on the Hill. So I think, and I also think that there's transparency there, because the market kind of knows what to expect from her. So there could be that sort of comfort level. I just think she's really going to have to do battle with inflation and resetting monetary policy, and figuring out, how we're going to work with all of this stimulus and debt that's out there. So it's certainly going to be a challenge. I think it's interesting. A good mix of his cabinet are women. That's encouraging to see as well. Fresh ideas coming to the table, and qualified people coming to the table. So I think, the thing she's going to have to contend with the most, and of course, this has been out there, it's nothing new, is inflation and how we are going to manage all of this money that's out there.
Yeah, I think that basically, you hit the nail on the head in terms of my comment. It's like, how do you deal with, number one, there's a fairly extensive new stimulus package proposals also being mentioned. I think they said, I've heard this statistic. I have not fact checked it, but I've certainly heard that something like 25% of all the currency and money that's out there was created in the last 2 years, which I don't know if that's accurate or not, but certainly I know that there's been mountains and mountains of debt, and more stimulus is going to create more and more debt. So I think the big test for Janet Yellen is going to be exactly what you said, which is, how do you deal with inflation when you have this much creation of new currency, of fiat currency? And certainly, what effect is that going to have on stocks? Usually, it's a good thing for stocks. It's a bad thing for the U.S. dollar, meaning that the dollar will go down. Stocks, because their value is not necessarily gained by the currency that they're denominated in, should do fairly well if more debt is created. And then, of course, things like Bitcoin come into question, as obviously U.S. dollar continues to potentially get weaker by more debt creation. And how do you deal with inflation? So there's a lot of really going to be a tough test for Janet Yellen. And yes, she certainly has experience, and she certainly, has the market knows what to expect from her because she's been in a prominent role in the past. So I totally agree with you in terms of your comments that inflation and debt will be the test of Janet Yellen in her new role. So the next thing is that the markets are near all-time highs, and they seem to be rejoicing to an end to the uncertain presidential year. That we had the inauguration go through without a hitch, and certainly now we are entering into the 2021 first earnings season of 2021, which is actually the annual results of 2020. And my thoughts, my question to you is, what do the markets expect given that the pandemic continues to rage on? In fact, there was just some news out of England today that the UK variety of the pandemic is potentially more deadly than the normal variety, the normal strain. I don't know what the normal strain of a pandemic is, but I don't know what else to say. But needless to say, what do you think companies expect from 2021? As we know that 2020, the results seem to be good, but they're massively revised down, almost as if 2020, it's everybody kind of just, wrote it off and took it as a wash or a loss. So I'd love to hear your thoughts on 2020 annual results and 2021 going forward.
It's really interesting. I had a couple of strategists and economists on the show this afternoon, and we were talking about that it feels as if the market is pricing in what's going to happen 6 months down the line, which is not a surprise, discounted forward mechanism, blah, blah, blah. But, they have the expectation there is going to be some short-term pain. The data that's continuing to come in it is not good when you look at COVID-19 progress and employment numbers and the slowdown that we're seeing in the services sector. You have to remember it's also lagging data. So the headlines are going to be worse before they get better. And again, it's not a light switch that you flip on because Biden's been in office for 3 days and we expect a miracle with 80% of the population vaccinated. It doesn't work like that. So in the short term, they expect that. They expect that. The pricing in, okay, so if everyone is vaccinated, and Fauci said this last night in the press conference, if we can get 75 to 80% of the population vaccinated, it potentially could be something where third quarter feels a little bit more normal. So when you think about it, clearly the comps against 2020 in certain areas are going to be better because 2020 was just so horrible, right? But then you have to ask yourself, okay, is the economy back firing on all cylinders? Maybe you have to comp to 2019 to make that comparison. When you have air traffic down 90% to compare, June 2020 to June 2021, it's going to look very different. But what does June 2021 look like to 2019? So I think that's what companies are going to be judged on. I think 2021 will be looked at as a recovery year. We're just so far behind because we haven't had a strategy in place. And then what they say in terms of guidance is really what's going to matter. And I feel that now that we understand policy, now that we're starting to place timelines on getting to the other side of COVID-19, and there being transparency, it's going to be easier for management teams to make these judgment calls. I did an interesting interview at the end of the day today with Edelman. It's called their 2021 Trust Barometer. And one of the things we discussed was how global entities look at doing US business in the US, right? And the comfort level was at 40%, Mike, right? We are the leaders, or we should be the leaders in the free world. And 40% of global people around the world feel comfortable doing business in the US because it's just been very chaotic. Hopefully those trends will reverse. So I think when we look at 2021, it's a recovery year, guidance matters. And then, 2022, you have to make your numbers, because the thing is, valuations are lofty. We talk about this all the time. You can't just
what's right. You can't justify valuations based on the recovery anymore. You have to start basing valuations on the numbers that are coming through. And I think companies are going to stop getting the pass for that.
Yeah, I agree with you. I think that everybody kind of just wrote off 2020. There really is, it's hard to compare 2020 to anything in any of our personal experiences. I mean, it was a complete anomaly of a year in terms of earnings results. And yes, there was a drastic push to digital from analog. If you were not prepared for doing things in a digital way, some businesses like Chipotle, did fairly well and survived and actually in some ways thrived because of their early adaptation to some digital technology for food delivery and things of that nature. Certainly we saw companies, like DoorDash and et cetera that did exceedingly well, and lots of IPOs that were of a digital orientation did exceedingly well. In terms of the year overall, I think 2021 is certainly going to be a recovery year. That is, unless something else doesn't happen, some other new surprise, which is always the case in any year. But certainly, with the earthquake of the pandemic, the kind of earthquake of change, that occurred in 2020, we just don't know what to expect. Is it a real estate crisis? Is it a potential banking crisis? The debt crisis, inflation? There's so many things that could just pop up after a year like 2020, but we just don't know yet. The good thing is that we have a vaccine, and certainly many of us have learned to deal with the situation as it currently is. I think that the airline industry and the cruise line industry, I mean, it's just been basically marking time. I think that cruises are not really set to resume until 2022 in earnest anyway. It seems like from what I've read, it looks like the cruise industry is probably not going to get back into full swing until 2022. So in terms of general results, I think that it's all about, like what you said, forecast. What do they think is going to happen in the next 6 months to a year? How are they going to recover? How are they going to get things back online? What are the changes that are being implemented by the new administration? How are they affecting business, et cetera? So we will be very, very keen to watch as the various different companies announce their earnings, and certainly one company that didn't really participate in the early part of the pandemic. It was really hot, Netflix, but again, Netflix has shown incredible growth and a great quarter, and was a bit of an upside surprise. And now Disney is kind of is now the upstart versus Netflix, whereas long ago Netflix was the upstart versus Disney. So it's interesting in terms of a role reversal between Netflix and Disney. And then of course we're continuing to see these kind of anomaly popping stocks. Such as GameStop, which I'm certainly interested to hear your thoughts on that whole story. And so let's first talk a little bit about results. You think there's any surprises that we're going to see coming into this earnings season? I mean, certainly Netflix surged; it did phenomenally well. What do you think of Netflix's results and their kind of new role reversal with Disney, and then we can move on to GameStop from there?
Yeah, Netflix was interesting, and clearly the results were impressive. I mean, they did a fabulous job with growing subscribers, which is what they're judged on. The significant move to the upside that it experienced to add that multiple billions to market cap for 2 million sub beat was, I thought that it was a bit much, but price trumps all, right? But and even when we get to the other side of this, I don't think people are going to give up their Netflix subscriptions. I mean, the way we do things is just very different now because for example, I did something on gaming the other day, and just want to get to the other side. It doesn't mean people are going to stop playing their Xboxes and PlayStations because the social component is so driven into it. It's the way that we socialize now when you think of these different kinds of streaming services. And Netflix being the GOAT, if you will, in the streaming space, and they have the money to put on those productions. And it's the entertainment world has recognized it doesn't have to be married to a studio to get production done. I mean, I've seen movies where people have filmed it on their iPhone Pros, and the authenticity is what makes it so interesting. So I don't think this is going away. And then when it comes to GameStop, Mike, you and I have spoken about this before. Everyone has a stock that no matter what they do, they can't trade out of a paper bag. I'd never get it right. I've never gotten GameStop right, regardless of the squeeze that's going on now, regardless of it making the rounds in the Reddit feeds and so forth. I just don't understand when we talk about brick and mortar, how GameStop is the only one that continues to move higher when you don't even need them anymore. Everything's streamed. You buy the hardware and then you stream. You don't buy discs or anything anymore. So unless I'm missing something with the model, I just don't get it. Besides the short squeeze.
Yeah. Every time I have gone to GameStop to try to buy a game for my kid, they never have the game. So I end up just going home and buying it directly from, on the Xbox and downloading it right onto his Xbox. And what you had said earlier, so I agree with you. I think this was just a battle between, this was a battle between Citron and some other, researchers and analysts that caused this short squeeze, and it was just a supply and demand anomaly that drove GameStop to it surged up, and we're going to look at the chart in a few minutes. But in terms of Netflix, I'm more considering canceling my cable subscription. The only thing that hasn't got me to cancel my cable subscription is that my telephone, which I've had for about a bazillion years, is also tied into that subscription, right? So my internet and my telephone is tied into my cable, so I kind of get TV with it. But I would be more inclined to cancel cable television than Netflix. So I totally agree with you there. It's kind of been built into our lives. In fact, not only do I have Netflix, but I have Hulu, and then I have some other thing because, I wanted to, I have Disney, I think it's called Disney Plus, because I wanted to see The Mandalorian. So you end up getting these services and paying this, $10, $12 a month because you want to see this program and you're waiting for the new content to come out, and they kind of hook you by one hook program. And certainly Netflix has a half a dozen hook programs. So it certainly is that the content is king situation. And when I think about it, I think about all the movie companies, the movie theaters. The one thing that certainly never seems to be reopening in most of the country, and certainly has lost the glamour of a release is the movie theater. That movies used to be released in the theater. Now everything is just going right to Netflix, going right to Hulu, going right to whatever, whatever service, or on Prime. The other one I have Amazon Prime as well. So my point being is that the way that we have done business is different. It seems like movie openings and opening night is a thing of the past. Certainly, our subscriptions are very sticky, meaning that we're very unlikely to get rid of them. And and certainly companies that have done well converting to digital seem to have been the big winners. Even companies that are brick and mortar, like I had mentioned earlier today, which is like the Chipotle Mexican Grill, Domino's Pizza, which has a great digital app and great delivery, and certainly all these delivery services which bring food to your house where you don't have to come in contact with people. They've done very, very well. So the entire world has changed, and I think that the companies that have changed probably prior to this or adapted prior to this are the ones that are going to have the best results in 2020 for the year and going forward in 2021, because I don't think, from what we're seeing anyway, that at least for the first 6 months to 9 months, things are going to be drastically different because the pandemic is still here. The vaccine has not, achieved herd immunity. although we're hoping it does in the next 6 months to 9 months, and we'll see how things progress from there. But I don't see a lot of change in 2021. It's kind of like a do-over, but we're more used to it than 2020. So on that note, any final thoughts before I jump to the charts? Jill, one last thing, I have a question. Thoughts on the big sell-off in Bitcoin, and we were right again on Ethereum. So any thoughts on Bitcoin and Ethereum?
When it comes to Bitcoin in particular, we know this is a volatile space. It's a young space. It's 11 going on 12 years old. It is not an established space, nor does it have the market structure of more established asset classes. So volatility is going to be there. It's still young. The marketplace is trying to figure out where it works, how it's going to work within their portfolios and so forth. We saw massive institutional adoption in 2020, more so than we've seen before, which is why it's very different than 2017. The volatility isn't necessarily coming from retail trading as compared to what we're seeing now. But I will also say that there will be short-term pain. The market's trying to establish what levels this makes sense at. But longer term, I am a believer in digital assets. We're not moving away from that. We're not going to move away from decentralized finance. And if you think about it, I saw a really interesting chart the other day. Investopedia passed it along in the newsletter, so the credit goes to them. They broke down Bank of America's core verticals. There were 7 or 8 of them. And they listed the different types of new fintech companies that are out there that are competitive to those businesses. So when we think about wealth management, the Robinhoods in the online brokerage platforms that we see, when we think about lending, SoFi is competitive with it. There are so many newer fintech companies that are pushing this theme of DeFi out there that are just not attacking, but are competitive with the different verticals of the larger banks. So I don't think it's going anywhere longer term. The world is focused on banking for the underbanked or unbanked and making capital accessible to everyone. So I don't think it's going anywhere. I know it's not going anywhere. I'm a long-term believer, but you have to expect some short-term volatility in between. I mean, we see it happen with stocks all the time where they don't perform and then all of a sudden the trend is right? Look at Peloton, for example. The trend with COVID-19 came along and it has come back since. So, you have to think of the trade versus the long-term trend, in my opinion. But
absolutely. When something, go ahead.
But I moved all my stuff into Ethereum.
I said, yes, I am. So me personally with Bitcoin, when something runs from, 13, 14,000 to 40,000, you're going to expect to pull back to 27, 28,000. It's just mathematically, when you have that kind of a parabolic move, you can also have a parabolic pullback. And certainly Ethereum has made that drastic move up as well, but Ethereum has a lot more use value in terms of its uses in the DeFi space. It's the infrastructure for all of DeFi. So certainly think that Ethereum, has a lot more upside to it. Bitcoin does as well, but you should expect a lot of volatility. And these big pullbacks are great opportunities to add to your position if you are going to buy and hold, because if inflation continues to be a problem and the money printing press for stimulus continues, Bitcoin and Ethereum, as well as stocks, will most likely continue to go higher because their value is not really changing. It's the value of the dollar that's changing. It's going down. And these things are safe havens against a weakening dollar. And that's something I just want to, reiterate and point out to people. But on that note, let me see here.
Have an awesome
I want to
weekend.
jump to the charts.
Thank you for everything.
Thank you so much, Jill. Have a great weekend. Yeah, hold on one second. Here we are. There's my charts. All right, so first one that we always like to go through is we brought up the S&P As you can see, we have our dash trader platform here, and I got my level 2 screen, my time and sales, I got my color coded volume, and I got my major moving averages all there put on my charts. We can see that the S&P has been in a very steady uptrend that has been making higher highs and higher lows for quite some time. And I'm just going to throw a really quick trend line on here. Okay. So here's a trend line. You can see that the trend has been up. We've never violated our trend line. This is this trend in the latest channel. We really are just coming off all-time highs. If I snap this to a weekly chart, you can see that this was the pandemic sell-off and the blast off higher. We took out and blasted off, and even are squeezing even higher. So we really don't see any negativity as far as the moving averages, the trend lines. Price is above all the moving averages. Price is above all the trend lines. So really there's nothing negative to talk about on the S&P. On the DIA as well, kind of up here at all-time highs. The QQQ as well. Also blasting off. And I think that the one thing I will say that is obvious is that the QQQ is the strongest. It's the relatively strongest of all of them. And it is not only the strongest, but it blasted off in the last 4 or 5 days. Last 4 days, it's blasted off to all-time highs. It had been kind of just hanging in there, but now it has broken out of its consolidation and gone to new highs. Now, we talked about Netflix and FLX. There's the big gap up in Netflix. Big gap up on Netflix, breaking away from its current moving averages. You could see the size of the volume on that gap up, and you can also see that we're retracing down. Just this is very, very normal gap reaction. That after you have a huge monster earnings gap up, that you have a kind of retracement from the to the area or the low after the gap up. And so Netflix, very, very bullish and positive. Just give me 1 second. Let me just take a look at Disney, because Disney has not come up with earnings yet. Let's take a look at Disney. There's Disney. So Disney had a huge gap up on earnings on its last earnings report. So Disney usually comes out with earnings towards the middle of earnings season. So we got a couple of weeks yet. I probably would expect an upside surprise from Disney as well. It had a little bit of a negative reaction for at first, a little sympathy gap up with Netflix, and then the last 2 days it's kind of settled in there. But I would expect good things from Disney as well based on this chart. It's very, very bullish chart. Now this is the fun one, GameStop. Incredible short squeeze on GameStop. This was when the, I guess it was Wall Street Bets started to contradict Citron. I don't really know all the full details of the story of how the short squeeze started, but here is GameStop, which has been kind of holding sideways, and then all of a sudden, the initial breakout to the upside on the short squeeze, consolidation, and then in the last week, just absolutely astonishing move to the upside. Yet today was just so parabolic from 42 up to a $76 high, pulled back to 67. And this is very typical. What is a short squeeze? A short squeeze is when all the available stock is in holders' hands. And obviously there's a lot of shorters on the stock, people who have sold the stock. So they're getting squeezed. As the stock goes higher, people who are short the stock are losing money. So they're being squeezed out, okay? And this was the last bit of that short squeeze. So you can see there was a lot of people squeezed out. Some of the shorts did not give up yet. And then that final exhaustion and absolute utter just, get me out of this position at any cost, drove it from $42 all the way up to 76. And again, the problem with shorting something is that you kind of have infinite potential to lose. If this goes to 200, you're losing money. Whatever the price you got in, you're short. If it was $16 minus 200, now you're down massively. So you can really lose infinitely when you're short a stock, because it can go up infinitely, from a theoretical perspective. So this is the classic example of a short squeeze. And because this stock was so heavily shorted for some very good fundamental reasons, the traders that blew up this short, made out exceedingly well. And let's talk about a couple of companies that we've been mentioning for some time. One being Facebook, right? Facebook under antitrust investigation, as well as being investigated by attorney generals all around the country. Facebook certainly making a recovery since Biden's inauguration. Facebook, holding up there, but it was about to fall, meaning it was looking like it was teetering on the brink, and then it recovered nicely. Also, Google doing exceedingly well, after the Biden's inauguration, or potentially just because of Netflix earnings. Google also blasting out to the upside, and really, you got Apple as well blasting off. So you got all the companies. Apple has a ton of China exposure, and now with Biden in there, maybe things will not be so hot with China and the China trade war. So you got all the big tech giants looking like they're going back to their highs, potentially making new highs. You got this kind of store of value play going on as the dollar gets weaker and more dollars are being printed. And technology seems to be a good place to store your money, the value of your money. So certainly all of big tech looking good. Now, one stock that we had mentioned a long time ago is X, which is U.S. Steel, not faring so well. It did exceedingly well when Biden won the election, and then certainly continued to go higher. It looks like it's kind of just making a pullback, and it's near its current trend line. I'm just going to show you how to do the trend line here again on Dash Trader. So you just draw it, you go to the lowest low, which is your anchor, and then you can kind of project it out. And so we're really right here at the trend line. I'm just going to make it a little bit thicker so that we can see this trend line a little bit better. So you can see that we're kind of at the trend line, possibly a pace for it to reverse back to the upside if this is just a pullback. The moving averages are still up. Certainly U.S. Steel has done fairly well. Another one that we had mentioned a couple of times is FCX, which is a mining company. They mine gold as well as copper and some other things, but certainly in a strong uptrend. I think that they're benefiting from all of the same, meaning the weakening U.S. dollar, meaning that commodities as well as gold are going up in value, and certainly some more, I would say, some more certainty in the markets overall has helped them. But they've really broken out, as you can see from the November election, as they were some expected beneficiaries of a Biden victory. I think 3M as well was another one. Let's see, 3M certainly recovered a little bit, but not really an exciting chart. But those are a couple of the stocks. Now, I want to pull in, we talked about Bitcoin, so we always look at GBTC, which is the Bitcoin tracking stock. Certainly Bitcoin looking like it's made a pullback and has kind of found the floor on that pullback, and potentially might go up from here. It's at $34, $34.36 right now, but had been as high as 47 or 48. That would be the area that I would expect it to go back to if it starts to swing back to the upside. And we mentioned Ethereum, which is ETHE. So Ethereum tracking. Now, this one's a little funny because it had a split where it did a 5-to-1 split, and that made the chart a little bit crazy. But needless to say, it's been holding in here at 14. It's not really responding the way you would want a tracking stock to respond. It's not really showing a real good correlation with the underlying. So I would probably caution people on this one, although Ethereum does have some really good prospects long term. All right, so let's look at oil. USO. Let's look at USO. This is the let me do once. So USO is the oil tracking stock, and we had mentioned in our newsletter as well as in various different sessions of our weekly analysis that oil was going to make a comeback, and certainly it has. Oil has been on the rise since it kind of crashed in the pandemic, and there was one point that oil was at $- a barrel, and they have come back pretty steadily. So oil has been doing good. Now, last but not least, I want to take a look at gold, GLD. Really a kind of a boring story. It's not really. It certainly looks like it wants to go higher, but it hasn't surged to the upside quite like Bitcoin has. Gold being a little bit more of a conservative hedge against currency risk. So certainly gold has not surged quite like Bitcoin or Ethereum has, or even as the tech companies have as well. So looking forward to 2021, I would say that we really want to continue to watch tech as the pandemic continues to rage on, although we have some light at the end of the tunnel with the vaccine. And of course, dollar weakness means that people are looking for store of value, meaning they're trying to put their money somewhere that they're going to make money on their money, especially in light of so much money being printed. People are afraid of inflation. So on that note, we're going to pull back. I hope you guys like looking at the charts on our DAS platform, and we're going to be doing that going forward. And I'm going to be teaching a little bit as well about how to use DAS and how to do different things on DAS on each one of these sessions. So next time, stay tuned. I'm going to be adding a section to my chart, and I'm going to be configuring two of the indicators that I like to use on our next show. So last but not least, just want to give you guys an update. Stay up to date with all things DAS by signing up for our monthly newsletter and emails. Simply fill out the form at the bottom of the webpage at www.dastrader.com. Subscribe to our YouTube channel at DAS Trader TV for DAS Trader Newsroom reminders, and follow us on all of our social media outlets. That is LinkedIn, Twitter, Facebook, and Instagram. And I thank you, everybody, for joining us here in 2021. We are looking forward to this year and to earnings season and our upcoming competitions this year, our number one best trader competitions. Look forward to seeing you all in our next session, and talk to you all soon. Have a wonderful weekend, everybody, and thank you always for joining us. Bye-bye.